Ford is crazy cheap. Prove me wrong on a move back up to $15 soon. So with earnings of around $2.30 a share, and revenue growth huge in the past 8 quarters on average, not to mention the EV potential of the company in the long run, we are under $10 people, the chance of a lifetime. At a PE of 10 or 12 normal for this company, and low with a company that can compete in the EV space. We should be at a price of $23-27 a share. The UAW strike is over and now this thing can moon. Thoughts? I am thinking of buying the January 19th $15 strike calls for 6 cents. Then waiting until they are worth about 30 cents and sell them for a 5x profit. I am also going to sell put verticals weekly to collect on the cheapness of this. Advice? They could go bankrupt and still make huge money. Value of the business is worth way more. I went through this with Ford during the crash and went for broke when it went to 0.80. Loaded it all up and ate Ritz crackers for a couple months. Went to $19 and let's say I'm retired and still hold a position below a $1. Compete in the EV space. Bro, Ford laid off 700 people from the F-150 Lightning line due to poor demand unrelated to UAW strikes. Their EV division EBITDA was 102. They recalled all the Mustang Mach-S because the connectors were melting when people put down full throttle. It will be a more compelling gamble if it breaks below $5 over the next few years. Everyone has already pointed out the main negatives and economic headwinds they face, so no need to repeat them. I bought at $4 and sold it all like 3 months ago. The car industry is going to nosedive for a while. If you're looking to make a quick profit, then buying the January 19th $15 strike calls and selling them when they reach 30 cents is a good strategy. However, if you're interested in holding on to this stock for the long run, then I would recommend selling put verticals weekly to collect on the cheapness of the stock. It was like $2 not that long ago. 2009. Give it some time. Ford needs to do something about their dealerships overcharging for their vehicles and ripping off their customers. Say what you want about Tesla, but their users don't have to deal with that. If you think F is nice here, GM has a PE of less than 4 with higher earnings and broader growth opportunities. First time valuing a car company? 1 EV business driving huge losses. 2 union driving up labor cost at worst possible time as they transition to EV. 3 worst recall record of any company. Pass. If you bought Ford stock in January 2000, you'd be down 36 today. It's a shit dud stock. I oddly agree with this. I picked up 200 more shares. If you haven't noticed, new vehicles and homes are completely unaffordable for most people. Wouldn't buy that with your money. The Ford Maverick is the cheapest truck on the market. Comes with hybrid or turbo gas engine. Bullish at this price. Grin thumbs up. EV is costing all car companies a ton of money. Without government subsidies they would have already canned EVs. They're down for a reason. No one can afford 100K trucks anymore. I'll be honest. I think Ford is a bit of a snoozer play. Yes, you'll probably make money. However, at $15, what is your upside? In 1 year from now this may be a $17, $18 stock in the best case scenario. If you're going to take a risk and play individual companies, there's no reason to put your money here versus other plays. I'm American and I don't fuck with American vehicles. No way in hell I'm getting an F-150 over a Tacoma. Kanichwa. Bitches. I don't think there is going to be any quick bounce. Outrageous interest rates. High car prices. Car repo numbers inching up. Unemployment going up and higher unemployment being pushed by the Fed to bring inflation down. Combined with a looming recession in the next year or two, car companies will not have an easy time the next few years. This reads too much like the mental gymnastic of someone who is already in too deep on calls and is just trying to convince themselves that everything will be alright. You can get $13 strike at 0.06. Not $15 on this one. Look at the option data. Ford is fucked in my opinion, it's cheap for a reason. IDK about soon, but they have the best government relations of any automaker and are enormously important to the labor market. Have a ton of room to make mistakes without existential threats. They'll figure something out over the long run. Totally agree. Bought 15k shares. And happy to collect the 6 dividend until the federal government decides EVs are a bad idea. Godspeed. I play with options. But Ford is one of the companies I outright bought stock. Over 400 shares with an average of 10.43. I believe it's going to stick around until I retire. So buy and hold a little a month is the plan. Close to 50,000 shares now and adding more. I wouldn't touch Ford, a company with $3.40 of debt for every $1 worth of stock ran by the UAW. Wait till debt refinancing hits. Chapter 11 Inbound. Ford is the stock you learn to the wheel option strategy on. Overall you'd be better sitting on plain old SPY. VOO. VTI. RQQQ. Been sitting on this dookie stock for way too long. I hope you're right. Not worth. Rather invest in a startup like Lucid, Rivian or Fisker. Absolutely not. Finally, a Wall Street Bets stock pick I agree with. This is a dividend-paying company. It doesn't matter if they go to $15 or not. I would toss in money because of the passive income that can reinvest itself on a yearly basis. Maybe? I bought in because they were investing more into EV and battery manufacturing. Now they've announced that they're slowing down the build-out of their new supply chain. And they're also mad that no one, to no surprise, wants to buy expensive Mach-E's and F-150 Lightnings when Tesla is cheaper. And the same is true for their gas cars. I could see layoffs happening. There's the strike as well that will slow down labor. Perhaps they will turn course once the strike is over, but it depends on the negotiation outcomes. Risky play for sure. But GM seems to be going through the same pains. I like it at $4. I like money. Everything crazy cheap. RN loudly crying. I'm not disagreeing. But looking at GM, what factors make Ford more compelling in comparison? All indicators I see say GM is as good or better. Ford will go out of business. With the union bending them over the barrel and doing more than spanking them. Disposable income and savings in the shitter. Student loan payments resuming. And interest rates sky high? I think I'll wait. They are going to get slaughtered by up-and-coming EV companies as they failed to convert their manufacturing process. I'm sitting here reading the WSJ and it feels like the propaganda mouthpiece of old big money companies like Ford. I'll give y'all financial advice: stay away from the sub. Been the chance of a lifetime for 20 years now. They have a freaking $100 billion in debt. Buy in 100 share increments. Wait until the price pops to around $11 and then sell leap calls at $12. The premiums will be nice. The dividends will be great. If in a few years it's worth $12, let the shares go away or roll the calls out further and move the yardsticks.